this piece, we're going to talk about the Market Watch, which is essentially looking at what the Bank of England are doing and ultimately what's going to happen with interest rates and how that knocks on with mortgage rates. So, quick recap. We have got rates still at 5.25%. So the Bank of England, even though the committee now at the last vote, 2 of the 9 members said they wanted a rate cut. So we're starting to turn that corner. And of course, there's a clamour for rates to be cut by the wider analysts and commentators in this area. But of course, the Bank of England have stuck their heels in, as we well know. And with the election now looming the next 3 weeks, then we are not going to get a rate cut at the next committee meeting. Now, I'm recording this on the 5th of June. The Bank of England committee will meet on the 20th of June. And I can pretty much categorically say that even if conditions are right for the Bank of England to reduce rates, I don't think they will dare to do that 2 weeks before an election. They will absolutely be hammered for that. So therefore, we're not going to see a rate cut until at least the following meeting, which is August. And that does rely on inflation continuing to go in the right direction. We've had a fantastic drop at the last inflation report. It dropped from 3.2 to 2.3, which is a significant reduction. And again, increases the volume from the commentators to say, come on, Bank of England, let's get rates dropped. But as I said, we're not going to see that, notwithstanding the election. But even looking beyond that, we're going to actually get a slight blip. I said this last month, that inflation, the next report is actually due out 1 day before the committee meets on the 19th of June. And I expect inflation to drop a little bit more. So again, this consistent dropping of inflation towards the target of 2% suggests that everything's hunky-dory in the right direction. However, here's the thing. We're going to have a blip. I said it before. Inflation's going to rise a little bit, maybe back up to 2.5%. Not much, but a little blip in the road. I think the Bank of England want to see inflation over that blip and back down again, and then be consistently heading towards that 2%. And in fact, next year it'll go below that before they press the button. So I've said it before, and I'm sticking with this. I don't see the election pushing this can down the road. I think rates will drop around August, September time. And I'm sticking with that view, even though we've now got the election in the mix. But what the takeaway message is, I do not see rates dropping sooner, certainly with the election for the reasons I've said. So if you're sat on SVR, my takeaway message is I would make decisions now, because even when the Bank of England drop rates, and that means that the lenders will start to drop their mortgage rates, we're only talking about a 0.25% of a drop at any one time. So let's say August, September is the first cut, and that's maybe when we see the first mortgage cut of 0.25%. We may see one further cut before we get to December. So in total, there might be a 0.5% cut by Christmas. But if you're sat on SVR right now and really hurting financially and paying 3 or 4% over the odds, then whatever you think you're going to gain, you're losing right now. I would make the decision. Get onto a lower rate today. Even what I would consider, however, is taking a 2-year fix instead of a 5-year fix. Look, you've got to take a decision in the round. A 5-year fix may suit you for other purposes, but make sure that you look at the 2 years, because it might be worth paying a little bit more, because the 2 years are still being priced higher than the 5-year fix. So the 5-year fix looked compelling because clearly it's a lower rate, but I do believe that rates will drop towards the end of the year and will continue into 2025. So if you've taken a 2-year deal, you're getting a good deal now, but you should get a substantially better deal when you come to refinance next time round. And I think that is really compelling to consider if you're sat on standard variable rate right now and already paying those higher rates. But to give you some specific advice, you've got to book on the link below. There'll be the link to our calendar in the comments section. So if in doubt, what you need is personalized advice. What I'm giving you today is just generic commentary. You've got personal advice from a mortgage advisor. And if you don't have one you can rely on, then book some time in with a team and we will give you some ideas on what's out there right now for your circumstances to ensure that you save as much money as possible.